Hello and welcome to the Fine Print. Today, we're going to address the question to AI or not to AI. And hopefully, Sandeep is going to help us answer it. You might disagree with him very, very strongly, but leave all of your objections in the comments. We'll try to address them.
Sure.
So, Sandeep, you've personally been an investor in AI and tech for a long time.
Yes.
What people may not know is you're also an investor in SpaceX. So, let's begin from there. This company, which had an IPO valued at 100 times their revenue,
Right.
and it went up in IPO. Now it's come down a bit, but it's still above the IPO price, and it's still valued at 100 times roughly revenue.
Right.
Can you tell us what the thesis is behind this one?
So it's of course it's a very long story with SpaceX. I've been tracking it from I think 2000 onwards. So it's been like almost 5-6 years. What I think is SpaceX is one of the most innovative companies right now. It's an engineering marvel. No doubt about
2020
it.
onwards.
2020 onwards.
Huh.
And so I've been studying like the progress of SpaceX and what they had done prior to that and after that as well. So just like some facts, one of the very key fact. So there is only one company on earth and no other company or even a country can compete with them when it comes to making reusable rockets. So that's like a very big deal. And it's not like they have come up with reusable rocket right now in the last 1 year or 2 years. It's been there from last 10 years. They have done landings like 500 times or more. Their costs are 10 times or less than any other competitor when it comes to launching.
You mean 1/10 or less of any competitor?
Any competitor, yeah. So it's 1/10 or even lesser than that. And the competitors are mostly countries.
NASA.
Yeah, so country
Yeah.
funded companies. So NASA, and then there's European, and then there's Indian, of course, ISRO and stuff. So it's the only private company. So that gives a sense of how big a monopoly the company is. And then, of course, there's a lot of reasons for it being the engineering
Sure,
stuff.
sure,
Yeah.
sure. But as far as I understand it, their current revenue comes from Starlink, from providing internet to people around the world through satellites, and that is $18 billion.
That is 18 billion. So again, like because they have been now, of course, they want to get into their own satellite network, and they have been launching their Starlink satellites from the last 5 years, 2020 onwards. They have launched 10,000 satellites so far. Again, the number is like astronomical and nothing compares with it currently. The next best is, I think, 1,500 or something. So they again have a monopoly when it comes to satellite based internet. The subscribers have grown to 12 million subscribers within a span of again 3 to 4 years. The revenues back in 2020 when they started with Starlink was in millions of dollars. Today it is $18 billion and growing. So all this revenue has come in essentially in the last 3 years. And again, it's ramping up pretty fast. So one can see like where it's going to go in the next 3 to 5 years with given the monopoly of the number of satellites they have. 12,000 currently, they want to get to 30 or 40,000 in the next few years.
Okay. But what is the one thing or couple of things that would make you just exit your position in this company? So you've done well, you got it before IPO, you're sitting on good gains, but the decision to hold also depends on how the company does.
Right. So they have, of course, a lot of plans, right? One is to scale Starlink, the other is Starship, their new launch vehicle, which is again extremely used than their current Falcon 9. It can probably carry like 10 times more or even more cargo than the current rockets. They have already done like 10 or 12 test runs of Starship, and each test is more successful than the previous. And they're planning to get it launch, like do regular launches of this successfully in next few years. So they have, of course, plans. They have plans with Starship, then expanding Starlink, then setting up a base on the moon, and then, of course, eventually on the Mars and all the other things.
The data centers in
The
space.
data centers in the space. Now, of course, there are risks associated with such a company with these innovations. So what I'll be keenly looking at is if there is some technical glitches, let's say with the Starship, which is their main next big thing. If something happens with that, then yeah, it's a key risk. Another key risk is regulatory, because they operate in the highly regulated environment. So there could be some thing to do with regulations, with his personal thing with the regulators, the new governments, and then there's a key person risk as well, of course, involved, especially when it comes to Elon Musk.
Yes.
So I think these three will be the major things I'll be looking for.
Right. But just to ask you the question that I think most people would ask is, how do you justify a valuation with 100 times revenue? Is it that you've seen a Excel projection or some kind of projection that takes the revenue up so fast?
So they do have, like, some people have predicted the revenues, especially ARC, which does a lot of research into this, and few other companies too. They do project pretty high revenues. Now, of course, they have merged XAI as well with SpaceX, so they have a pretty good revenue line when it comes to AI, orbital data centers, and just AI models, as well as deploying the AI models. So that's one line of business. And with, of course, Starlink, there's another line of business. And with other space launch, because they don't just do launches for themselves, but for other companies throughout the world as well.
Sure.
So taking into consideration multiple lines, some projections are even like 100 billion within next few years, even going up to $1 trillion or more, if everything falls into place.
Yes. And as you pointed out a little earlier to me, they have already signed deals to lease.
Right. So
their
they are leasing out their current existing infrastructure, which XAI holds, the Colossus data centers that they have in Memphis. I think it's 2 gigawatt. It's like a huge data center. So since they are not using the capacity as much, they are leasing it out to players like Anthropic, Google, and just last week, Reflection AI.
So if you factor in that leasing, already the multiple drops to somewhere around 35-40 times.
Yes. So they have, I think, contracted revenues for this leasing in the range of $30-40 billion a year. So if you consider that along with Starlink and the growth of Starlink, then the multiples, which were like 100 at the time of IPO or before that, they drops to 50, 40, or even lower.
Got it. Okay. So that is as far as SpaceX goes. Let's now turn to the bigger AI theme. Every day I open Twitter and people are going hammer and tongs at people who are trying to invest in tech and AI, shouting valuation, valuation, valuation. So I'm going to go over roughly 6 objections to AI as a theme, and then we'll get into the specific portfolio that you have. The first is that AI is like the dot-com bubble. It's just all hype.
So yeah, that is, I think, one of the key objections you hear day in, day out. I've been hearing that for last 3 years or 4 years, probably from the time like Nvidia started growing like crazy. So comparing it with the dot-com bubble is obvious, because there are parallels to it. And the most important parallel people draw is with Cisco. Like Cisco was growing in revenues in the year 2000, and suddenly everything stalled, and Cisco dropped by 90%. All the application companies dropped by 80-90% or more. So there are parallels when it comes to the valuation and the pick and shovel nature of AI in the current state.
Yes.
But I think there's one major drawback with this comparison. Both are great technologies. AI is, of course, much more general purpose technology than internet. I would in fact put it in a different league altogether than internet. But when internet happened, if you realize, internet was an innovative technology, and they were building all the infrastructure for that. That's where Cisco was involved in building all the lines, cables, and undersea cables, and the routers, and all the infrastructure around networking. But at that time, there were no users who could have accessed internet instantly, because there were only few million PCs, right? PCs were the major devices at that time.
No smartphones.
No smartphones, there were no routers, there were no Wi-Fi, there were no 5G, nothing was there. So all that took almost 10 years for the build-up to happen, or even more, 10 to 15 years after that point. So one could say the infrastructure was much ahead of time than the actual use or application or the diffusion of the technology.
Right.
In this case, it's the mirror opposite. If you look at AI, is deployed mostly through all the applications, the software applications, and the devices. There are already billions of devices in people's pockets across the globe. Not just smartphones, but PCs, laptops. There's internet everywhere through Wi-Fi, 5G.
Do you have a number for how many people are using AI and how much they are paying the AI companies?
So just a high level number, like just Chat GPT has 1 billion weekly users. And Google has somewhere around 2 or 3 billion because they deploy AI through all their different 15, 20 products. Like Google search, for example, has by default AI mode now. So that's itself is used by more than 2, 3 billion users.
Correct.
Same is the case with, of course, all the social media. There's a lot of AI content. So directly,
not-
indirectly, you can say almost everyone is using.
Right. But not all are paying users.
Not all are paying users. So paying users are still less. I think it's like 5% or 10% when it comes to personal users, but growing very fast as well. The major paying users, I think, right now are mostly the enterprise users. And again, the enterprise section is growing pretty fast.
So do we have a figure for revenue of all the AI companies?
So there's an interesting report that came just yesterday, in fact, last night, and they claim that they have tried to come up with the revenues and without double counting the revenues across all the companies. And the figure they put is in the last 12 months, it's been $100 billion AI revenue across all the companies and across the globe.
And this is not double counting. So
This is not double counting.
So for example, if Alphabet is charging me some money for Gemini
Right.
and they are paying Nvidia, my revenue is only counted at the Alphabet level.
Right. Or the other good example would be Anthropic. So, for example, another company like, say, Cursor is using Anthropic in the background. So, they are not counting both the revenues, like what we are paying to Cursor and Cursor to Anthropic. So, instead, they are just counting one number over there.
Right. Right. So you said
So it's about $100 billion in the last trailing 12 months. And if we take the current ARR, like with the current month revenue and extrapolating it over the next 12 months, then it's 175 billion.
okay. So let me be conservative here. Let me say it is 100 billion and the total AI capex is 800 billion.
Right.
8 times
Projected.
what what the current revenue is.
Right. So it's again projected revenue through this year, of course, with the hyperscalers. And of course, there's already some capex gone because capex is growing like with the hyperscalers, it's growing 60% year on year. So the capex is still pretty high. But I think the key thing that everyone is observing and trying to figure out is not just the revenue numbers, but the growth in revenue numbers. And if that growth rate itself is accelerating. So both these things are equally important.
Sure.
And from what the numbers suggest, and not just these numbers, but even if you take the numbers of Anthropic, for example, which is a very vivid example when it comes to revenue. So Anthropic grew from $1 billion to 47 billion ARR in a span of 18 months, 1/8.
Wow.
So you could see the acceleration.
Could you repeat that for a minute?
So it's they have grown from $1 billion revenue run rate to $47 billion
Per year.
and that was like in May or even before that, May, 2 months back, which was again I think $9 billion in December of 2025, went to $14 billion by end of Jan. By May, it's $47 billion.
Yeah.
There's a rumor that it's now in June at $62 billion. Yeah, it covers both the points, like the rate of growth and the acceleration in growth.
Yeah. Sandeep, that brings us to the second objection.
Yeah.
Which is that is too concentrated into too few firms.
So yeah, this is definitely, of course, a risk when it comes to single company risk or idiosyncratic risk, or because things can fail at a company level. But what I think, like why this is happening now, that's more important, right? So I don't think this is happening because of some design or some kind of people coming together or companies coming together to form some kind of monopoly. But this is happening by nature of how AI economy works. And if you see that, like Like if you can look at the training of the models as well as the inference of the models, for example, which both are like extremely capital intensive. So even if you look at the history of training of these AI models, they used to be like from GPT 3.5, it used to be like 1000 GPUs and trained over 1000 GPUs for some time. Now that 1000 number has gone to 10,000, hundreds of thousand, and now they are planning to even train it on a million GPUs for that matter. And the same goes for inference as well. Like because so many people are using AI, like there are so many concurrent users, and like we spoke about, there are like billions of users using AI. So the hyperscalers, that's why they are investing so much capex. The size of data centers, traditionally they used to be like 100 megawatt data centers. Now it's in 500 megawatts or even going to a gigawatt data centers. Each gigawatt data center, for example, costs 50 to 80 billion dollars to come up.
Okay.
And the training cost has gone from tens of millions of dollars to now tens of billions of dollars. So by nature, this field is
It
becoming
has
like
to be only few can afford
capex.
this kind of
Only
space.
few can afford. Those who are already ahead in the curve, only they can put more money. No new entrants can come up immediately. So not just companies, but even countries can't compete right now.
Yeah,
So
absolutely.
that's what's happening with the concentration.
Absolutely. So this actually brings me very well into the third objection, which is that when a few companies only are capturing the value, the governments of those countries look at those companies and be like, here's a golden goose, let's rip it open. So the latest news was from South Korea that they are going to tax unrealized capital gains.
So
In fact, the workers of, I believe, both SK Hynix and Samsung in the AI division, they have gotten unprecedented bonuses. They formed unions and they took their pound of flesh. So how do you see this vulnerability?
right. So yeah, this is definitely again a risk, and which can happen with concentration as a next obvious step. And like you said, it's already happening probably to some extent in Korea with the government taxing, or China is again an example which we have seen in the past happening with companies like Ant, for example, like they grow bigger and bigger. To some extent, we can see government restricting some of the companies in the US as well. Like they have export controls on Nvidia, or even if they said that you can provide some chips, but we'll have a revenue share in that. Now they
Or
have,
what Trump did overnight with Anthropic.
yes, and or
Cloud.
yeah, with the latest Fable example, they stopped the new model. Uh, but what I think is, see, a lot of these companies and mostly the investments are typically in the US based companies. US is a capitalist nation. They have free enterprise, they have open markets, so they have a history of this over a long period of time. Nationalization against their system altogether. So I don't think it will go down that route. There could be regulations, some strong regulations, and or even some kind of investments. Like for example, U.S. government has invested in Intel, has invested in some other companies in the rare earth material companies. So I think that will happen probably more and more. They will probably pick up stakes, and there'll probably be some regulations, but nationalization, I don't think
Is unlikely.
is unlikely, especially in the US.
Sure. Okay. So again, a related objection is the countries which have been left out in the cold, them building models to unseat the leaders. And we've seen this with DeepSeek. China is developing still more open source models. And even in India, we hear signs that we should build our own AI. I'm sure every country is thinking the same thing. Won't that happen?
So that will happen, and that's natural. And we have seen with China as well with the open source models. And in fact, last couple of weeks back, they released another lab released another awesome model called GLM2, and it's going viral. It's in fact on the benchmarks, it's on par with GPT 5.5 as well as to some extent with Fable as well, or the previous releases. So open source is definitely a big competition. Other companies coming up like Mistral is there in the Europe. In India, we have Sarvam. So there will be competition. But what I think is the frontier labs will have this edge for a long time. Again, the key reasons been like we were talking earlier. They have a lot of capital, and they are putting in hundreds of billions of dollars to train the new frontier models. So if it goes to like a million GPUs, now there's a backstory to this. There's something called as scaling laws, which says it's an empirical law. It's not like a scientific law or something. It says the more compute you apply and the more data you feed in, the more capable the models become. And that has been evident over the last 5 years with each release of the model.
Sure.
And that's why they are pushing the limits when it comes to training on more GPUs. These frontier models are deployed at a large scale as well. So not just having a model capable to them is good enough. You have to even offer it at scale. And then you need the hyperscalers to do that, because all the data that all the lot of people are using these AI models, right? And all the data feeds back into the AI model, and that again feeds back into the scaling laws. So it's like ongoing self-recursive thing that is happening with these AI models as well. So that's the reason I think frontier models will still have pretty good edge.
Sure. And if I understand you correctly, even if the difference between frontier and the next best is just an inch, that inch is enough to take all the business to the frontier model. Is that roughly correct or no?
Yes, because see, again with intelligence, what we have seen is people do prefer using the latest model, right? And the latest, and it's not just models as well. So not just what we are talking about, like you have to offer it at scale, but again you have to wrap it around systems and tools as well, like what Claude is doing with, let's say, Claude Code or Cowork, and that makes these models more useful as well. So model is one part, capabilities of model is one part, but building the harness around the models is another big thing. And again, for that you need capital, you need distribution. Gemini comes up with a new model and they can offer it across 3 billion users overnight. The next day they can just
Correct.
launch it across all their products. So
Correct. They
distribution
already
is
have
one.
the trust of that kind of population, whereas a DeepSeek or some other new entrant may not.
True. There's trust and there's a distribution mode as well, which if DeepSeek were to build a 3 billion users, it will take still a lot of time.
Fair. And finally, and probably the most common one is that it is circular economy. One company's profits recycle into investment into the next company, which becomes profits of that company, and so on and so forth.
True. Yeah, so we have seen this argument, especially over the last year, with especially again with NVIDIA, I think, wherein the frontier labs, NVIDIA is investing in the frontier labs, the hyperscalers are investing in the frontier labs, and the money goes back. Like the labs use them to buy compute from NVIDIA or compute from the hyperscalers or the chips from NVIDIA. But what we have seen is the amounts, like the investment amounts, are really small as compared to what the capex the hyperscalers have or the revenues and the profits NVIDIA has. So just in last 1 year, NVIDIA did $200 billion revenue and 100 billion or more of net profits. So out of that, 40-50 billion dollars, if they invest in a company, for them,
It's not a big deal.
it's not a big deal. And from their position, like from Jensen's thinking, they are investing in the next big technology. And it's like a good opportunity because they have a line of sight of what these guys are doing, how much business they are doing. So they have like a 360-degree view of the entire ecosystem.
Finger in every pie.
Finger in every, yeah.
So Sandeep, let's go from the objections to AI and hopefully you address them all
Sure.
to how do you invest?
Right. So I think there's a good way to invest in the AI story. And what I've done is I've come up with a portfolio for the same. And the portfolio is mapped around the 5-layer cake that Jensen Wong had talked about from NVIDIA in, I think, 2-3 years back. And then many other folks have been talking about this. So what it says is you can the AI ecosystem is divided in 5 layers, starting with the applications on the top, and then the AI models beneath it, the infrastructure, which is the data centers, followed by the chips, the entire chips that go inside of this infrastructure, and the last layer is energy, which powers all the data centers. So this is the 5-layer AI ecosystem, which covers the entire AI ecosystem. So what one can do is we can invest across all the layers, and then there are ETFs that are available, especially in the US, which cover each of the layer. So there are companies within these ETFs, and there could be one or more ETF across each layer. Now it gives two diversifications. One is within the companies in each layer because it's an ETF. So we don't really bet on a single company
Right.
within that particular layer. And it's across the layer as well. Because what we have seen in the last 3 to 5 years is the bottlenecks keep shifting from one layer to another over a period of time. Like there was a shortage of chips earlier, like GPUs 2 3 years back. Now there's shortage of memory chips, like we have seen with Micron, for example, recently. There's an ongoing shortage of data center space. There will be a huge shortage of energy as these data centers start coming up. So what this portfolio does is it invests across all the layers, provides this diversification in both ways, and also captures the bottlenecks at different points of time. And that's what this portfolio does. And I would suggest like it's a good way of investing if you want to invest across the AI ecosystem.
Right. And just to outline the risk here, if one were to instead just buy Nvidia or just buy the Nasdaq,
Right.
it's only capturing one of the layers, right?
Right. So Nasdaq will capture some of the layers, but not all. So, for example, the energy layer, which are mostly the REIT companies in the data center space, or the financiers who finance these REITs, or even with the power, with the energy layer. When it comes to the power companies or the distribution companies, the grid companies, uh, so these companies will not be involved, let's say, in the Nasdaq. Or if you go with S&P, then a lot of these companies will be diluted. So I think that's one of the
Right. And that's the other objection to Nasdaq, that the top Mag 7 have a very large weight there. So if you are more bullish on the data centers or
Right.
power generators, you can't just get it through Nasdaq.
That's true as well. So that's one of the thing. And there's another thing which probably is not a very big thing, but companies are undergoing disruption in even in the software space, right? So Nasdaq is the entire technology. Some companies will gain from AI and some will be disrupted.
And here
because
you're
of
buying
AI.
both if you buy the Nasdaq.
Right. So Nasdaq has a big recent example is the SaaS companies. Like
Right.
there are a lot of SaaS companies within Nasdaq,
Yeah.
which might get disrupted. The verdict is still not out, but you never know. So then you are buying the whole basket, and then there's a drag as well
Correct.
on that.
Correct. Okay. How about returns?
So returns, this portfolio was designed and launched in on 5th of Feb earlier this year. So from that point till date, till yesterday, the returns are 32% in INR terms because it also captures the tailwind, INR tailwind, and in USD terms, it's 25%. And if we backtrack this for 1 year, then it is 55% for 1 year, and
1 year from the date of launch.
from the date of launch, and the 3 year CAGR is 35%.
Right. Again, the back test from that date,
From that date,
which is February,
which is February, 5th of Feb. Yeah.
5th of Feb. And how is the Nasdaq done in comparison?
So there's an alpha with this portfolio, like just from the launch, the alpha is 7.5% with the triple Q. And when we go back like 1 year or 3 year CAGR, then it's 14.5%.
Right. But of course, investing in something as volatile as AI means a lot of sleepless nights, stress, etc. How have you dealt with that? What kind of drawdown have you seen?
So the drawdowns are there, but since we are again deploying it across different layers, it's not as much as just a concentrated AI portfolio or just in the applications or the model space or even triple Q for that matter. So the drawdown has been lesser than these the index by itself. But there are, of course, yeah, and we have seen drawdowns of 15%, 20%. But then that comes with a technology like AI, which is evolving so fast, and there are disruptions almost every day in this technology. And then there are so many objections as well, right?
Yeah. Yeah.
When it comes to capex and the numbers. As
Sure.
such.
Sure. Okay. So, folks, if you'd like to know more about this particular portfolio that Sandeep has, please drop it in the comments. We'll try to connect you to our team and to Sandeep himself so you can discuss this in a bit more depth. But let's leave investing aside for a minute, Sandeep, and just give us an update on what's happening in the world of AI.
Right. So AI, like like I said, I've been following this industry from last 5 years, and incidentally, like even like a year or 2 years before ChatGPT, so before everything became mainstream, and I got convinced, I got hooked onto this industry like right from the start, because I could see where how big a potential this is, and because it changes like everything. It's an intelligence layer. It uh, it passed the Turing test, for example. So Turing test is Alan Turing had come up with this test for artificial intelligence back in 1950, where it says that if you can't distinguish from a machine and a human being, then then it's artificial intelligence or artificial general intelligence, and that's what has happened with this technology. So,
Although, just to be
Hmm.
clear, AGI has not yet been reached, right? We are only at AI level.
So in some sense, we have reached. Like if you take the Turing test, then we have already passed
Okay.
that. But AGI, yeah, like in the normal sense, we haven't yet reached, because it's still jagged intelligence. This AI is really good at some stuff, but of course, at some other stuff, it's really
Sure.
poor as well.
Sure.
So
So,
just still
yeah,
further away from that.
sure.
But
So, tell us about the deployment of AI into industries, ordinary life. What's changing?
so I think it's changing in both in both the areas. Like no other technology in the recent past has taken so much of mind share and work share of people, right? So people use AI in their personal lives as well. Like nowadays, almost like all the search is through AI. People create itineraries, travel itineraries using AI. In the office work, people do all kinds of research and analytics and coming up with reports. They take help of AI. Software engineers use AI almost 100% nowadays, and not just for coding, but even for designing, testing across the entire software chain.
On that note, given what's happening with IT, how bad is the job scenario in India, or how bad will it get? If AI is doing your job as a coder, do you need to be there?
So it's definitely a headwind, I would say, for software development and software services. Again, the reason being it's automation, right? And it's like 100% automation. It's not even like it's like 10% or 20% productivity gains. Uh, right now, the coding, it's like almost 100% you can code using AI or closer to that. Of course, a lot of people argue and say, but then we will need people to manage these AIs or manage the agents and
To
things
give
like that,
prompts, etc.
to give prompts. But I would say the number and the proportion will be far too less than
What it is current.
what actually it goes in manual
Hmm.
coding. So it's definitely a headwind, but at the same time, future is unpredictable, right? We don't know what's coming, how AI is evolving, what new things come in. If there are areas where the software developers or the entire software services, they can get some kind of different path
Right.
or direction in
Right.
AI, but that is still out. Yeah,
Right.
but within the current situation, yeah, it's definitely a big headwind.
Right. But in terms of daily life or the next things that we should watch out for, you would say are driverless cars and automated factories?
Right. So even just within the LLM space or the large language models, there are of course tons of things that will come up. Like the agents are already there. Things will start getting more and more automated. It will start getting integrated into enterprise and normal lives. Like we'll have AI agents in our pocket for personal stuff as well. But AI is also coming out of the screens as well, like in the physical world. And a lot of this automation or the robotic space now is getting transformed AI first. So similar to LLMs, now we have world models in robotics. So something like vision models or the world models, which understand the physics or the laws of physics and how objects interact with each other. So you can see like one classic example being autonomous driving and FSD from Tesla, or even there are companies in China as well, BYD and other companies. Waymo is there. So these cars are already on the road. Tesla has done like almost 10 billion miles on FSD cumulative till date.
I think the true test is when they pass Indian roads. At that point, we can safely give up and go home.
That's true. Yeah, we would love that, won't we?
Sandeep, thank you so much. It's been a pleasure.
Same here, Neil. Thanks.